Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, what do we got going on in the markets? Well, this crack up boom is starting to show some cracks. We got cracks in the crack up boom. Okay, so the crack up boom has been straight up, straight up, straight up. But now the last couple of trading sessions, we started to see these cracks, right? Okay, now where's the biggest crack? The biggest crack is NVIDIA. NVIDIA was leading the market up, right, along with the other technology companies, the Magnificent Seven, if you will, and now they're starting to show cracks. NVIDIA is trading down below its 20-day moving average. Now, what else has happened? Okay, so the leadership has shifted from the technology companies to the small caps. The IWM took off, right? And the Dow Jones making new highs, new highs, new highs. Okay, so those are still well above their 20-day moving average, the Dow and the IWM. But what's below the 20-day moving average is the NASDAQ. The NASDAQ is starting to show some cracks in the crack up boom. Now, the NASDAQ was leading us on the way up. It may have already peaked. I'm not completely sure, but it may have already peaked and now starting to lead the charge lower, right? Okay, now it's below its 20-day. Now the S&P came down, sitting right on the 20-day. We'll see if that can break through to the downside. But there's cracks in this crack up boom, okay? So the fact is, though, that they're still buying the debt. They're still buying the debt. Look at the junk bonds, the HYG. That's not coming down. That usually leads the market. It usually comes down before the market does. So this is telling you that the crack up boom may not be over just yet for the S&P. For the S&P, it still may be going and making a new high from here. Once that HYG breaks below the 20-day, then you got confirmation that the crack up boom is over and we're headed lower, but we could still see some upward momentum in the S&P. I think the NASDAQ, though, I think the NASDAQ has already peaked. We'll see how that plays out. All right, let's get over to, well, the real estate market. I'm going to talk about the housing market in a little bit, but first I want to talk about what's happened to your purchasing power. Okay, so we got currency, right? We got currency. You got to understand the difference between currency and real money. Now, the Constitution says the only thing that's money is gold and silver. That's real money. That's in the Constitution. Now, granted, the politicians would love to throw the Constitution away and just trade currency, right? Because they can print unlimited amounts of currency. Now, what's happened to your purchasing power in the term of currency since the pandemic? Well, it's gone down, estimated approximately by about half, Isn't that fascinating? Purchasing power is down about half. You go to the grocery store, it's much worse than that, but we'll just say you've lost about half of your purchasing power. Now, what is it really when you lose your purchasing power? It's a tax on you, right? It's a tax on you because the government, they didn't want to tax you outright, so they just wanted to steal your money. Now, how do they do that? They do that by printing more and more money. And since the pandemic, we printed, well, basically 10, let's call it 10 trillion. Okay, so we printed an extra $10 trillion that we didn't have. And that's how they steal your money from you without actually taxing you. It is a tax. It's called the inflation tax. It's called the loss of purchasing power tax. But they tax you and you lose your purchasing power. Now, who is this that's doing this? Well, it's the Federal Reserve. Now, I say we got to get rid of the Federal Reserve and get back to sound money. And I want to explain why that has to happen. They're just destroying our country. They're stealing from you. Okay. Now we take the housing market right. Okay, right now, the average price home, median price, I'm just going to use rough numbers here, not exact, but approximately $415,000. $415,000, you can go out and you can buy that average price home, right? Okay, now if you go back 20 years, what was the average price home then? It was about $200,000, so about half of where it is today, right? So it went from $200,000 up here to $415,000. If you're purchasing a home, you have to come up with, well, twice as much money if you're paying all cash, all all currency, if you will. So you'd have to double what you paid 20 years ago, 200,000 then, 415,000 now. Now that's currency, right? Denominated in currency. But let's talk about what it did in terms of real money. Now, if you went back 20 years, that's actually when I started to buy gold. That's when I bought my first ounce of gold. I was always a silver guy until then. Didn't really have any extra money, but I bought my first ounce of gold about 20 years ago. I'm just going to use rough numbers here. But I paid approximately $340 for that ounce of gold 20 years ago. 20 years ago in 2004, gold was selling for about $340 an ounce. Now remember, the average price home in 2004, about 200,000, right? So if you bought that home with real money, with gold, right? If you bought it with gold, how many ounces would it take you? Well, you divide 200,000 by the $340 an ounce, you would have needed 580 ounces of gold to buy the average price home. Okay, that's interesting, right? 580 ounces would get you the average price home. Well, what would it take in real money today to buy the average price home? Remember, the average price home about 415,000. Now, what's gold at today? Well, it's at approximately 2,400. We'll just use that number. But so you're take $415,000 divided by 2,400, and you come up with 173 ounces of gold to buy the average price home today. So 20 years ago, it took you 580 ounces of gold to buy the average price home, where today it only takes you 173 ounces of gold to buy the average price home. So the average price home went down by over 70% in the last 20 years. If you're using real money to buy it, right? Now, if you're using currency, it over doubled in price. See, that's the difference between currency, which they're printing all they can. They're going to continue to print. They're going to continue to spend. They're going to make the dollar go away. Dollar's going to lose its reserve status as the reserve currency of the world. It's going to lose that. It's going to go to zero. All fiat currencies always go to zero. No exceptions. Never been one that's never gone to zero, right? Okay, and we're not going to be the exception. A lot of people say, but Mike, we're the United States of America, where our currency's never going to go to zero. I beg to differ. Now, I will agree with you, they will probably reset the currency before it goes all the way to zero. But the dollar is going to go away. It's going to go to zero. But if you had started in 20 years ago and you had taken your paycheck in the form of real money, in the form of gold and silver, and you saved in that, and you invested in terms of gold and silver, you would be able to purchase a house for about 70% off of the price they're selling. But what's happened? You see, they printed the money. The house has gone up. Gold has gone up, right? I mean, gold's exploding higher because it's starting to tell you that their Federal Reserve is losing control. They're losing control. The dollar is spinning out of control. There's no purchasing power left in it. The only reason it has purchasing power is because, well, we got the military, we got guns, you don't pay your taxes. You have to pay your taxes with the dollar, right? So you'd have to take some of that real money and exchange it for dollars and pay your taxes that way. So that's why the dollar still has some purchasing power left. But for all intents and purposes, it's already lost 100% of its value. Okay, so we got the dollar spinning out of control. We have a world that is moving to a gold standard. They're doing it without us. They don't need the United States. They're trying to get away from the dollar, and they're trying to use gold to get away from it. The BRICS are starting their own currency, going to be backed 40% by gold. Okay, a lot of transactions are already happening in gold. They're trading gold for oil now. Okay, that's fascinating, right? It used to be you could only trade for oil in US dollars, right? But now about 25% of oil purchases are not not done in dollars. It's getting less and less dollars that they're using. The dollar is going to go away. Now, they say we got gold in the, Fort Knox, right? So we're going to be okay, right? I'm not sure we still have that gold. What is it? 8,000 tons, I guess we have. 8,000 tons of gold in the Fort Knox there. Nobody's audited them. Did they spend the gold already? They spent your Social Security money. They spent your Medicare money. They spent everything else. Do we actually have the gold? I don't know if we do. You see, gold is now a tier 1 asset. It's the only asset that has no counterparty risk. If you have physical gold, now if you have the paper gold, there's a lot of counterparty risk. Paper gold would be like the GLD, the ETFs, right? That's counterparty risk. They don't actually have the gold. Okay, it's like trading futures contracts. So you want to take delivery, you would break the COMEX exchange, right? They don't have enough gold for everybody to take delivery. Same goes with silver. Don't have enough gold and silver. But gold is honest money. It's anonymous money, and that's what I want. I want my money honest and anonymous. You see, what the Federal Reserve has done is they have destroyed our country. They've destroyed your purchasing power, taking it away. Every day that goes, they continue to print more and more money. We're printing $1 trillion every 100 days, and that just means your purchasing power goes like this. Now, you're going to have to, at some point, protect yourself. And everybody thinks they're protecting themselves by being in the stock market. Stock market is going up, right? It's going up. But in the last 20 years, gold has gone up much more than the stock market, about 32% more if you want to do the math. Gold is outperforming the stock market this year. It's outperformed the stock market over the last 20 years. Why don't they tell you that? Why does everybody tell you on Wall Street, you got to be in the stock market? Because they can't make any money on you in the gold market. Once you buy gold, it's out of their hands. You own it. They don't own it. They can't charge you fees on it then. Look, they want you in the system. You stay in the system, you're just going to get buried. The system is going down now. A lot of people don't realize how delicate the system is. You see, now that system is incredibly delicate. Now, if you have U.S. bonds, for example, the government's going to pay you, your interest is going to pay you the bonds. You can get your money outright, but they're doing it by printing more and more money. So the money they pay you back with is worth less and less. Where if you put your money into gold, it becomes more and more. Now, what about if you have your money in the banks? Let's say you have your money in a certificate of deposit. Okay, well, that's cool. You're making 4%, maybe 5%, but I'm telling you, real inflation is up around 9 or 10%. So they're taking, you're losing money. You're just losing money right there. Losing about 5% a year if you have your money in a certificate of deposit. Here's the thing. There's a lot of risk on the certificate of deposit. Why, Tall Mike? Tell me why there's risk. Because the FDIC doesn't have the money. Now, you say you're guaranteed to insured by the FDIC. They don't have the money. But what's going to happen? Well, the government's going to have to bail out the FDIC. Printing of money. Yes, you'll get your money back. It may take a few years, but you'll get your money back when they have the bank runs. But your money's going to be worth so much less. Look, the only guarantee the government has right now is they guarantee you that they're going to continue to print trillions of dollars. They guarantee you that your purchasing power of the dollar is going to zero. Those are the only two guarantees that the government has for you right now. And in my opinion, those two guarantees by themselves is pretty much guaranteeing you that gold is going to continue its upward trajectory. Now, gold is not going to go straight up. It's going to have some pullbacks along the way. And I suggest that's where you protect yourself. You protect yourself by buying some on any pullback. It's not going to go straight. I'd love to see a pullback down to 2,000. Wouldn't that be great? You could get some more, could load up the truck, right? And silver, same way. Silver's not going to go straight up. Right now, sitting around $30 an ounce. I think that's a bargain, personally. You look at it, was $50 an ounce back in 1980. You just take into account for inflation, you're well over 100, where its record high would be. I mean, and it's trading at 30. I mean, it should be up here around 150 just on that basis alone. I mean, that's a 5-bagger, but I think it's going easily over 300. That's a 10-bagger on silver. I think silver is probably the cheapest asset on the planet. planet. And I think it can protect you. That's just my take. You see, in the West here, we're not that smart. Now, China, they're a little bit smarter than us. They're savers. They save over there. We're spenders here. We go into debt. We like to spend, okay? But China, they like to save, right? Now, here they're saving, right? They got their money in real estate, but real estate in China is going down. How's their stock market doing, Tall Mike? Well, it's kind of going down, right? So they don't want their money in real estate. They don't want their money in the stock market, and they can't bring their money out in foreign currency because that's not allowed. But here's what is allowed. They can buy gold, and they're buying gold hand over fist, a lot smarter than we are. They see gold, they buy it. They see it, they buy it. They see it, they buy it. There's going to be there's going to be a flow of gold from the West flowing out of our ETFs over to China, and they buy it. They buy it. They're smart. They know how to protect themselves. We do not know how to protect ourselves. Less than 1% of people actually own any gold. Less than 1%. That's 1 out of 100. It's like 1/2 of 1%. Nobody is protecting themselves. And believe me, the system is going to go down. It's very delicate. Look, when I was a kid, I used to be so proud of our government. I thought we were the best in the world, right? Our government protected us, and that was great. Now we need protection from our government, from the printing of money. If they continue to print money, they will destroy us. We will not be able to survive. They will wipe out poor people off the face of the earth by printing money. Look, the government is not protecting us. Just look at the wall down in Mexico, build the wall, right? No, come on in. Everybody's welcome, right? They're overwhelming our system. They're overwhelming the hospital, overwhelming the school system, overwhelming Social Security and Medicare system with foreigners. That was set up for us, right? But they don't protect us anymore. You have to protect yourself from these idiots that are running the country. And the way you do it is you get some real money. Get out of their system. Their system is this fiat money that they can print as much as they want. They can go to war with it. They can pay for the wars with it. You get real money, we ain't going to war. They don't have any money to print then. You got to have real money in your possession to protect yourself from what they're doing to you. Anyways, if you like this stuff, I'm Tall Mike. Didn't mean to scare anyone before the weekend. Give me that thumbs up. Why not? Punch that subscribe button and get out there, everybody. Have a great weekend. We'll talk again next week. Bye-bye now.